Good morning, traders. It's Eve from MarketWizards.com and eMiniWizard.com, and it's just ahead of the open on the 13th of March, 2019. Reminding traders to use risk capital you can afford to lose. Taking a look at the current market structure, you can see that big W down here overnight. We had suggested to our traders, make sure you are paid by 975. The 88 975, this is a high value target for us, and we've been playing long side with one exception. We said convenient trade, if you wanted to, was to try to get back in and test this 02 area that we felt would be important, because we've got the 03 as a third time through breakout and hopefully align with that. But it gets dicey at the open because traders have had a good run, want to make sure they get paid. So there's a little squeeze type trade, and so we've advised traders to make sure you are paid coming into the open. And here's a 10-minute chart that we thought last night. We'd looked at this and thought this looked pretty good. As long as we could hold this pink line, this is typically a support line. First time back, you can see how it worked down here from the moonshot. Yesterday, consolidation, and today still drifting higher. Part of the rhythm in options expiration and in rollover as well. NQ has been pushed into higher highs. So everything seems in sync, and yet we're getting to a territory where we want to make sure we don't overstay. 1 foot on a banana peel type trade today. And here's the red zone that we said we were entering into. Green zone down here, support at 88. And we can see the 00 in the middle. And then the next resistance target up here at 12.5. We've come a long way from down here at 26.5. It's a squeeze type trade right now. Here's your breakout, the 03. Taking a look at that high, that was 04. We said yesterday that's the controlling high the boys want to knock out. Had to pull back overnight and held beautifully at that 88 area. And now we've been skating up ever since. Solid bars. These are 120-minute bars, every one of them positive so far. And we're stretching to come up and see if we can test into that 12.5 area. So as we get closer to that 12.5, that starts to create the risk and reward idea. So anybody long side, again, should be paid by the open, and still it doesn't negate these targets. It just means that's the risk and reward component of where we are right now. And you can see this W, higher highs, double in here, a little bit higher high, 85, and then the 88s. So 82, our support is still intact. There's just a great look at this turnaround, this undercut low. So as we approach the 12s today, if we can get there, all stops should be tightened up. And I think at the open, we may get a little chop. And here's our angels and demons. Overnight, 89.75. And we do not have a demon currently. There's a squeeze type trade on the shorts. And we had suggested that we were going to use 98 as our aggressive support. It just makes sense. So anybody that is into the 08 to 975 must be paid. And it's a matter of risk and reward. And sometimes you'll let it go and take your profits and it goes without you. But if you participated, you want to lock something for sure. You don't want to put it all at risk. Why would you? Nobody knows where the market is going. So when the market gives you a gift, you take it. There's your RTH 5-minute chart. And I'm not a big fan of multiple gap up days. The way they've done this, creating these islands, is what it is. Convenient trade today will be short side. Trying to grab a couple of points. And keep an eye on that all-important 02 to 03 area. And here's our 03 down here trying to hold. And this is a 3-minute chart that I've got on right now. I'm expecting a little bit of a squeeze and a little bit of a chop. And anybody who understands the stolen range idea today understand that we've come a long way from overnight, and that backing and filling today before we're done would not be a bad thing. But for now, the shorts are on the hook getting squeezed to test our primary targets today of this 975 to 12.5. And the gap trade and half gap trade will be available before we're done this morning. And we can see in perspective as we're approaching this red box up here. And I think this rollover is designed to come back in and test in this pink box up above here before we're done. And I've said that I even think we're going to get a new high. Maybe test that 28, 29 and a quarter that we had talked about before this big plunge. And now we seem to be heading back up there to try to retest. All we can do is follow support and an up move. Those who fight the up move will guess right occasionally, but the bigger traders, it seems, have been pushing upside to fill positions again and retest these breakdown areas. So big support for us today, 92. 92 breaks, it's another story. And this may be whack-a-mole type trading this morning. Trend traders going up. Contras against the push. And here's taking a look at a different type of chart, the ones that I've made fun of for years. And not because I don't believe that they work, but because I grew up with another style of trading. So I've learned to listen to other people who use these, and like a good baseball coach, you're going to try to study your opponent and see what they're seeing and how that jives with your approach and what information that can help us with as traders. So the areas that typically I hear people like always talk about will be low volume nodes and high volume and points of control and so on. And they're going to largely jive with things that we find in our work too. So obviously you're looking for W patterns or M patterns, and they're looking for higher highs and higher lows and evidence of support. And so for us today, we felt that probably this 98 area was our support once we got above that, trying to skate higher. And we said, okay, as long as that's intact, that's going to be our primary support for now. And we're trying to get up and take out the O3 and third time through, and then hold the twos if we can, and try to skate up and test higher into that 8 to 975 area. So almost complete with that. And of course, we can go to any high on a breakout, but we've suggested to be done for sure by the 12 and a half, and to bring your stops up as we're going, because theoretically traders are going to want some profits, and when they do, typically that causes a reaction. So right now we think that the early shorts have been being squeezed, and maybe the second or third mouse will get the cheese today. And step by step is the way we like to see it. And you never know when news will come out. And that's the problem with just doing a video first thing in the morning and then walking away from it, because, markets can change and turn on a dime. So you can have a plan A, but what really happens when news comes out or whatever, you have to be able to react, and you have to be able to change your opinion on a dime. So far, nothing has changed my opinion that we are seeking that 8 to 975, and then obviously the 12 and a half if we can get there. But risk and reward should start to come into the picture. And here's the tunnel through time. Overdone one side, overdone the other, comes back in. It catches the 60-minute chart. The blue line, which is pushing, pushing, pushing. And you can see this has, again, been done in overnight push. And it's a lot easier, especially options X. Float it up, and then perhaps get some backing and filling. And this line right here we put in, this is our 82 line. We said busted, support right behind it. 78 to 82 support, and that's held. This has been a reversal right here. Initially, that was we started the week, we said, okay, this is going to be a key, this chart. Looking at these lows, looking at these highs. And we've taken that out and stayed above it. So this is a continuation squeeze. And at this point, you can't fall in love with your trades as a long side after this run. So we've advised traders to be cautious coming into the red zone. And this is our OTF predictive chart. Just lays out the ground rules. And we take them one step at a time. Right now we can see we're in the red zone. We can understand relationships between highs and lows and in-betweens. Nobody knows for sure whether we stop at 12 and a half, whether we get there, but we do know we're in the red zone. And so for now, obviously this 83, 82 is supportive. We just showed you there. And then step by step, higher high, higher low, higher high. And make sure you paid risk and reward as we approach this level right here. This is E for eminywizard.com and marketwizard.com. Hope this gives you an insight into the things that we like to do as traders and the way we like to analyze markets. And for those of you who have interest in learning more about us, go on to our shop page and check out our upcoming products and specials, April Fool's special, and the next live trading room, which will start March 25th. All right. Any questions? Contact me, e@eminywizard.com, or admin@eminywizard.com. Have a great day.